Hello, ladies and gentlemen, and welcome to another episode of Trading for Life. What a week it's been. After that sharp drop in April, we've now set a new all-time high. Back in April, Donald J. Trump remarked that it was a good time to buy, and ever since, the market has continued pushing higher. Last week, we saw another new record high. What a time to be alive. This is the fastest recovery in history. With that being said, let's dive into the news. If you find value in this video, please be sure to like and subscribe. Let's get into it. The stock market has shrugged off major concerns, including the US bombing of Iran, the ongoing global trade war, and the old Wall Street adage, sell in May and go away. Despite these headwinds, the market now looks set to finish June near record highs. Both the S&P 500 and the Nasdaq Composite closed at record highs on Friday, surpassing their previous peaks from February and December, respectively. While there are a few catalysts that could push this rally even further, investors should also be mindful of the risks ahead. A key inflation gauge came in slightly hotter than expected in May, likely delaying any Fed rate cuts until the fall. The PCE index, the Fed's preferred inflation measure, rose just 0.1% last month, its third straight minimal increase, according to the Bureau of Economic Analysis. However, the core PCE, which excludes food and energy, rose 0.2% in May, pushing the annual core rate up to 2.7% from 2.6%. Overall inflation ticked up to 2.3%. While both remain above the Fed's 2% target, they don't yet signal serious concern. Normally, this level of inflation would support a rate cut, especially with high borrowing costs weighing on home and big-ticket purchases. But the Fed expects tariffs to drive prices higher soon and wants to wait for confirmation. We should start to see this over the summer, in the June and July numbers, said Fed Chair Jerome Powell in testimony to Congress. The PCE, short for Personal Consumption Expenditures Price Index, is considered the Fed's most reliable inflation forecast. The central bank focuses on the core reading to avoid noise from volatile food and energy prices. As President Donald Trump pushes to rally Republican support for his sweeping One Big Beautiful Bill Act, several key provisions remain divisive, including one focused on artificial intelligence. The bill, which Trump hopes to sign by July 4th, includes a controversial moratorium on state-level AI laws that's drawing criticism from both parties. The House-passed version bars state governments from enforcing any law that limits, restricts, or otherwise regulates AI models and systems. This has sparked debate over whether states should retain the right to govern emerging technologies like AI. Adam Connor, Vice President of Technology Policy at the Center for American Progress, warned that the provision could dismantle existing protections against harmful AI and block states from introducing future safeguards. Now let's review some data. We begin with thanks to recent gains, the S&P 500 just completed its fastest recovery ever from a drop of 15% or more. After falling 18.9% from its February 19th closing high to its April 8th low, the index surged back to a new all-time high in just 89 days. Beating the previous record of 90 days set in 2003, this rally also aligns with a historically strong period for the market. According to Dow Jones market data, when the S&P 500 rises in both May and June, it ends the year higher 77.1% of the time, with an average annual gain of 6.8%. July is typically a strong month as well. Historically, it's the best-performing month for both the S&P 500 and the Dow Jones Industrial Average. On average, the Dow gains 1.5% in July. The S&P 500 rises 1.7%, and the Nasdaq adds 0.9%. Major central banks are shrinking their balance sheets at a record pace. Over the past 6 months, the Federal Reserve, European Central Bank, Bank of Japan, and Bank of England have reduced their asset holdings by an average of around $110 billion per month. This pace of quantitative tightening, QT, has been sustained for the past 2 years. To put that in perspective, in 2019, balance sheet reductions averaged just $30 billion per month, nearly 4 times slower, and only the Fed and ECB were participating in QT at the time. Currently, the ECB is leading the way, cutting about $60 billion in assets monthly, followed by the Fed at $35 billion, the BOJ at $10 billion, and the BOE at roughly $5 billion. Historically, when this much liquidity is withdrawn from the system, markets tend to experience elevated volatility. So the question is market volatility about to make a comeback? U.S. existing home sales fell 0.75% year-over-year in May, dropping to a 4.03 million annual rate, the weakest May since 2009. It also marked the second worst May on record and the fourth straight monthly YoY decline. The slump comes as persistently high mortgage rates continue to dampen housing demand. At the same time, the median home sales price rose 1.3% year-over-year to $422,800, the highest ever recorded for May. Home prices have now surged 51% since the start of the pandemic in 2020. Despite slowing sales, housing affordability continues to worsen. Retail investors bought a net $3.2 billion in stocks over the 5 days through Wednesday, a sharp rebound from the previous week's subdued activity, according to JP Morgan data. This time, individual investors favored ETFs over single stocks, with strong inflows into broad market, gold, and energy equity funds. Notably, interest in the Magnificent Seven remains muted, making up just 2% of retail portfolio allocations. Retail investors appear to be diversifying. Even though the S&P 500 and NASDAQ hit new all-time highs, the Fear and Greed Index remains at just the greed level, sitting at 65. We might see extreme greed levels as we move into July. Now let's see the key events for this week. Monday, Chicago PMI, 2 Federal Reserve speakers. Tuesday, ISM Manufacturing, PMI, JOLTS job openings, Fed Chair Powell speech, Constellation Brands, STZ earnings. Wednesday, ADP payrolls, Tesla, TSLA, Q2 deliveries. Thursday, non-farm payrolls, U.S. jobs report. Unemployment rate, initial jobless claims, ISM services, PMI, U.S. stock market. Closes early at 1 p.m., ET Friday. Independence Day, markets closed. All right, ladies and gentlemen, that's all for this video. Thanks for watching. If you have any questions, feel free to drop them in the comments. I'll get back to you as soon as I can. If you found value in this video, please make sure to like and subscribe. Bye for now.